Hi everyone and welcome to this video where we will be taking a trial balance and making a series of financial statements. So let's hop over to the computer and look at this together. Green Lawns Incorporated performs adjusting entries every month, but closes its accounts only at year end. The following is the company's year-end adjusted trial balance dated December 31st of the current year. So we are given an adjusted trial balance, and what that means is it's the trial balance after adjusting entries have been made. Adjusting entries we learned in chapter 4, and so these adjusting entries are made to update financial statement accounts like equipment. We update that for a decline in value, depreciation, and it gets captured in this contra asset account called accumulated depreciation. So this trial balance reflects adjusting entries that have already been made. And our job in part A here is to make an income statement as well as a statement of retained earnings. So let's get started here. First thing we want to do for any financial statement is we want to put a header at the top here. So we're going to name the company. So Green Lawns Inc. And we will be preparing an income statement. And we will be preparing this for the year ended December 31, current year. Okay, income statement. We have first the revenue, and let's see what kind of revenue this company has. So I'm just gonna look through this trial balance. It looks like the income statement accounts start here towards the bottom. So lawn care revenue earned is the first income statement account. Everything above this point is balance sheet. So we can, for the purposes of making the income statement, we can ignore everything above 230,400. So all of these accounts are all balance sheet. All right, so revenue here is 230,400. And let's format this so it looks nice for ourselves here. And we are going to make this financial format. All right, so we have revenue of 230,400, and then we can list out the expenses. And so I'm just going to list these underneath. So the first expense, it looks like we have salary, supplies, advertising, depreciation, as well as income taxes. So let's just list these out. So we have salary, we have supply, expense, we also have advertising, and we have depreciation, and we have income taxes. All right, and so let's list these out. So salaries were 124,800, and I'm just gonna copy the formatting that I have here for all these cells. Okay, so we have 124,800. We have, and actually let's make this negative so we remember that it's subtracted from revenue. Okay, and then the same thing for supply expense, minus 2,880, minus 720, minus 2,400, minus 2,784. Okay, and then we can total these up. So I'm just going to say sum up all of these values and give me the total here. And so then I'm going to put a line here just to indicate that I'm going to subtract that from expenses, and this will give me my net income. So net income is this plus this, and so net income is $71,760. All right. Just a couple of notes. This 158,640 is coming from the total of the expenses. And again, I listed this in parentheses to indicate that it's negative. Expenses reduce revenue. So we're going to take revenue minus the expenses, which total 158,640, and we get net income of 71,760. And we could put, if we want, a double border on the bottom here, just so we know it's the final total. And then if we wanted to, we could bold these and center so it looks a little more professional here. We could bold the top line and bold the bottom line, and we could bold the expense header. But that's the solution here for the income statement. The second thing they want us to do is to make a statement of retained earnings. So I'm just going to do this down underneath. I'm going to call this the statement of retained earnings. And we want to take the beginning balance of retained earnings. And I'm going to say that the beginning balance comes from the trial balance here, so it's 108,000. And then we're going to add in, so I'm going to say plus net income minus dividends. So our net income is this number here that we just calculated. So I'm just going to link those. So I did this in the spreadsheet. I linked it up. Let me make this a little bit bigger. So now you can see the net income is coming from the income statement above. Dividends. So dividends here, if we look at the trial balance, dividends were $4,800. So I'm going to say minus $4,800 dividends. And then if we add net income and subtract dividends from the beginning balance of retained earnings, we will get the ending balance of retained earnings. And if we total these up, I'm just going to say sum up these, and that will give us our ending balance of retained earnings, $174,960. So there is the statement of retained earnings, which they asked us to prepare in Part A. And then we also need, in Part A, we need to do the balance sheet. All right, so let's do that. Let's zoom back out here. So I'm going to take the header again. I'm going to change the name of the statement to balance sheet. And with the balance sheet, it's not for the year ended. It's at that date. So at December 31st, current year. All right, and the balance sheet's going to list out the assets first. So let's see what assets we have. And the assets are at the top of this trial balance. So it ranges from cash all the way down through accumulated depreciation. Remember, accumulated depreciation is what we call a contra asset. It's a negative value asset. It is a partner to the equipment account of 28,800. So these two accounts go together. All right, so the accounts are cash, accounts receivable, supplies, equipment, and accumulated depreciation for the equipment. So how much has the equipment gone down in value? That's what it tells us. So we're going to say equipment is 218,640. I'm sorry, cash is 218,640. Accounts receivable is 10,800. Supplies are 720. Equipment is 28,800. And accumulated depreciation is negative. All right, and that will give us our total assets. So we can just total this up. All right, so $246,960 as our assets. I'm going to bold this so we can tell easily that it's a total. Next section, we want to list out our liabilities. And liabilities here are going to be accounts payable, taxes, and that's it. So you're going to have accounts payable. Sorry guys, my dog's going a bit crazy here. You're going to go accounts payable, and then we'll also go income taxes payable. So accounts payable is $3,600. And then income taxes payable is $8,400. And then we have our total liabilities. We can just sum up those two. Sum. Okay. And then we have our next section will be shareholders' equity. And it looks like we have capital stock and retained earnings are the two equity accounts. Remember, dividends they're captured up here in the statement of retained earnings. They don't get used again in the balance sheet. So we're going to say capital stock and retained earnings. So capital stock, they tell us is, what is it here? So capital stock is 60,000. All right. And then retained earnings. The mistake that everybody makes is that they say, oh, trial balance retained earnings is 108. But in our statement of retained earnings, we recalculated the ending balance here. So we're going to say retained earnings are 174,960. We're just going to link it here in our formula. And then we have total shareholders equity. And that will be the sum of these two amounts. And then finally, we're going to say total liabilities and shareholders equity. And this will just be the liabilities of 12,000 plus the total shareholders equity of 234,960, and we get a total liabilities shareholders equity number of 246,960, which is the same as the asset number of 246,960. So we did it correctly. We got a balance sheet that balances, which is always good. You don't ever want to have a balance sheet that's out of balance. And that's it. We have so now we've created, just from this one trial balance, we've created the income statement, the statement of retained earnings, and then also the balance sheet. All right, so we did part A. Part B says, does this company appear to be liquid? So liquidity refers to the speed at which a company can convert assets to cash. So what do we think about that? So let's look at their so liquidity is the company's ability to convert assets to cash. So let's think about the company's liquidity. They have $218,640 of cash. They have an additional accounts receivable that should be collected within 30 days of $10,800. And they have some longer term assets down here. So their liquid assets, the assets that are close to being cash, are about $229,440 down here. And then their short-term liabilities, or their liabilities in total, are $12,000. So they have about $230,000 available to pay their debts, and they only have debts of $12,000. So the answer here to part B is yes, this company appears to be liquid. They have enough cash to pay their short-term debts. And then part C is asking, has this company been profitable in the past? How could we tell that? Well, we could tell that by retained earnings. Retained earnings captures all of the income that has been made through the current year. So because retained earnings, the beginning of the year, the number was 108, and it only went up from there, that suggests to us that this company is indeed profitable. So part A, the answers are these three statements. Part B is this company is liquid because they have significant amount of cash assets and receivables, and only a limited amount of liabilities. And then this company is profitable, and they are profitable because their retained earnings is in good shape. It's a significant number here. All right. Well, I hope you found this video helpful. Thank you very, very much for watching. Take care.